Start of the post-lunch session. Once again, the mandatory requirements. Please ensure your mobiles, connected devices are on silent mode. And as you seat yourselves, got to tell you that this is also going to be an interesting session. This is a panel discussion on REITs, the game changer. As we start, we'd like to thank all of you for making it a success. To remind you that to be eligible for the draw for the Porsche, to use it for a day, please ensure that you hand in your cards at the Porsche desk, which is just in the foyer area. There'll be a draw later on in the evening. If you're there, you're one of the lucky ones, well, a Porsche for a day. It's good. We'd like to thank our silver partner, MMR, for making this very special for us, our associate partners, Aryan Superstructures and HDFC Realty, our supply partners, FIFA, that's the Federation of Independent Financial Advisors, and AIBI, the Association of Investment Bankers of India. Our knowledge partner is Jones Lang LaSalle. Ladies and gentlemen, it's now my pleasure to call on the panel to the dais. This panel is going to be moderated by the Managing Director of Cushman & Wakefield, Mr. Sanjay Dutt. May I please request Mr. Dutt to take center stage. Mr. Dutt brings a wealth of experience over 20 years in real estate. As a real estate professional and an entrepreneur, he's garnered a wealth of respect in that amount of time. His expertise includes, of course, transaction advisory, including land acquisitions, dispositions, joint ventures across everything, office, retail, and residential spaces. He, of course, leads the India operations as Executive Managing Director for Cushman & Wakefield, and, of course, all the South Asian markets, he spreads the growth. So, ladies and gentlemen, thank you, Mr. Dutt, for being with us. On the panel with Mr. Dutt, we have Aftab Alam, who is the Chief Investment Officer of Hayat Investment, based out of Kuwait. Hayat Investment is a Sharia-compliant company with interest in multiple assets across multiple regions, and Mr. Alam's experience is across a wide range of companies, including the NTPC, SEBI, BNP Paribas, and Capital Market Authority of Oman. Joining Mr. Alam, we have a gentleman who needs no introduction. Mr. Niranjan Hiranandani is one of our panelists. He will be joining us in a short while from now. I shall move on to the next gentleman. He has 22 years of experience in business management with strategic roles in various organizations. Ladies and gentlemen, he is the Managing Director, Development for RMZ. His expertise includes, of course, real estate, telecom, infrastructure, and insurance. Ladies and gentlemen, please welcome Mr. Arshdeep Sethi. Joining Arshdeep Sethi on the dais, a gentleman who needs no introduction. He's been asking questions, and very in-depth ones too. He is, of course, the managing founder and partner of his eponymous named Nishit Desai Associates, which is a world-renowned organization which has experiences, it has offices all across the world, too many to name. I can briefly tell you that the Lex Witness Hall of Fame has named him as among the top 50 individuals who have shaped the legal landscape of modern India. Ladies and gentlemen, Nishit Desai. International expertise on international law, corporate law, very extremely published, and of course he does also lecture at the best of academic institutions all across the world. Joining Mr. Desai and the panelists, we have, apologies for the papers, the Executive Director, PricewaterhouseCoopers, and he's also in charge of tax and regulatory services as its leader, besides, of course, handling asset management, Gautam Behra. Gautam brings to the dais about 3 decades of experience focusing on asset management, a regular speaker at international fora. He's a member of the National Direct Tax Committee of the Confederation of Indian Industry and the American Chamber of Commerce, and on the Expert Advisory Committee for the Institute of Chartered Accountants of India. Ladies and gentlemen, with this, it's my privilege to hand you over to your moderator. Just to remind you that Mr. Niranjan Hiranandani will be joining us as soon as he's on with us. Once again, the same rules apply. We have time constraints, so time permitting, at the end of the session, if there is time, at the discussion of moderator, Mike will come around. Please stand up, identify yourself, ask a question. Over to you, sir.
Thank you so much. A very good afternoon to all of you. I think this session wouldn't have deserved the kind of profile that we're very fortunate to have with us. Certainly, it makes a world of difference when you have the best stalwarts and the industry experts on the dais interacting and giving the opportunity to all of us to actually ask some very relevant and important questions. This country has gone through several revolutions in the last few years. We saw the IT industry, we saw the telecom, and one can argue that there's more to come and we could have done better. But still, some of the game changers have happened very successfully in the past. And amongst the negativity that we all see every day on the television, if we can just step back and look at some of the success stories that this country has witnessed, and with that angle, if we can approach the next subject that we're talking about, REITs, the game changer, I think it would really help all of us, because sometimes it's the intent and the positive approach that really makes the difference to the subject and to the policies that this country badly needs. I will start. It's a good combination of developers, two developers. Niranjan will join us shortly, and Arshpreet from RMZ, and of course, investor with us, institutional investor, of course, can also wear a hat of a retail investor if we have some questions to answer. And of course, consulting firms, tax and legal advice, of course, very accomplished and very experienced. So I'll kickstart this discussion by approaching Mr. Nishit Desai. Just setting the context right for our discussion, I'm going to ask some very basic but very important questions. What are the key features of the SEBI draft that they rolled out? And I think the first draft itself was very comprehensive. I would like Mr. Desai to touch upon. And very quickly, if we can follow that, what is the current status? And I would ask Gautam and Nishit. Gautam, you can follow after Nishit. And so we can figure out where do we stand today, because there was a momentum. We thought we almost got it, and then we missed it. And I know there's some story that you can share, whether it was taxation or that was some other things that you wanted to include, will be very helpful. So, sir, with all due respect, requesting you to kickstart, sir.
Oh, thank you so much. Am I audible?
Very much.
Okay. So, if you see the history of mutual funds, and even the concept of real estate mutual fund, that began to be talked in the year 2008 around, and but again it fell out because of number of weaknesses. Now we are having the new one, a draft that has been suggested by SEBI, and all the features are actually listed here. You don't want to be bored after a great lunch. In this article, is published in the Bloomberg. ET has been very, very gracious, I must say,
to do that.
And they are very good, in that way. But so, I think, if I may put it this way, most of the features are here. The whole concept of REITs is against what you call the normal AFI model. Okay, is that REIT is particularly meant for the smaller investors as well. But you need to provide proper liquidity. You need to provide proper regulations. Most of the regulations, as you know, have evolved from the US. And the concept is very simple. We are making them a little more complicated with too many innovations in the whole thing, is that you invest in the properties which generate income and distribute that part of income to the investors. Okay, this is the whole concept. And if you invest, if you distribute 90% of your income, generally the REIT itself will not be taxed, only investors will be taxed. Okay. In the Indian context, there are a number of issues at times we are coming across. When we draft regulations, what has happened, they have said, okay, the REIT can invest only in securities. Now, for the purpose of corporate law, it fulfills the definition, but for the Securities Contract Regulation Act, it does not fulfill. So there are a number of micro-level issues in this whole game, which we need not go into detail today, and I don't want to go too deep into this whole thing at the moment. But if we can, secondly, for example, things like investment in LLP, which is another animal that we have innovated. We do not have in India as of now what you call business trusts. I think that is another thing we need to innovate in India. Of course, there are a number of different entities, like LLPs and LPs and whatnot, but business trust is another thing that we need to do. But you can't have everything. So for the time being, trust model works, and that is all right. In the whole process of doing all these things, what we have actually done is to export our capital market, especially in the real estate side. So you go and list in AIM, at the AIM, you go to Singapore and stuff like that. As far as the status of this regulation is concerned, it's awaiting people's comment. Some comments have been already received by SEBI and the government. But my understanding, and somebody can correct me, is that still there is not enough buy-in at the highest level. That is what
Can
is my...
Can you expand on that, the highest level?
I believe that at the finance ministry level, there is still not buy-in. I do not know, but what people have met with the different bureaucrats, and there is still some apprehension. As far as SEBI is concerned, it seems there is a lot more buy-in, but at the highest level, there is some concern. Now somebody else can interact. I'm a lawyer. I'm not here in investor conference to invite investment. I'm very optimistic, don't get me wrong for a moment, but my job is to tell what I feel.
Correct.
And so please pardon me for that. But I feel that this is where we really need, as an industry, to communicate to the finance ministry and the highest level people that why REITs is very important and why we need to have it as soon as possible. Today, look at, I'll just spend one more minute on this subject. I was in the US last 3 weeks. I met a number of people, a number of investors around. First concern is that US itself is doing well now. It is growing at the rate of about 2.75%, some say about 3%. India at the rate of 4%. So why should we not invest in more allocations go to the US? Some people will be able to comment. Second, from BRICS, we are now moving to BRICS because Russia is out. So one opportunity is that what investment would have gone into Russia possibly can be tapped in here. Next 2-3 years, you do not know. China and Japan have already been at a friction.
So please join us. Yes.
Niranjan, I think you...
Maybe you're right. I think
lawyer should have last word.
Come. No, please. Come in.
Sir.
Sorry.
So, no. So, just I was giving a little flavor as to how I see things around the world. As to the US, real estate has been doing extremely well. The investment that you made in Silicon Valley 2.5-3 years ago is doubled. New York, 57 and Park has become billionaires row. Maybe you have some.
And probably so has London, Singapore.
Everything. Now, India has an opportunity, but I think we need to move fast. Industry has to make a noise and make sure that government listens to my understanding on RF. I was just being asked a question as to what do you think the status of REITs in India is. Okay, all of us know that SEBI rules are there, but there is not enough buy-in. That is what is my understanding at the top as far as REITs are concerned. We need to communicate to government that why we should bring in REITs as soon as possible, both for the benefit of the small investor in India and also to attract larger investment. Because if we do not use this opportunity, then we'll have a problem. Because a lot of investment in Russia has stopped at this point in time. So from BRICS, it is becoming BRICS. And China-Japan relationship has gone haywire. So they want to invest in India. And third, the US is already growing 2.53%, so investment may go on that side more in other parts of the world. But I think we need to, so that is what is my understanding of the status. But somebody else can always correct me that I'm wrong.
No, not at all.
Thank you.
Thank you so much. I'll move to Gautam very quickly. I believe you were working with the committee as well proactively. Can you throw some light on this?
Yeah, I thought what would be useful to the audience is just for me to share some experience on over the last 6 to 8 months. We spent quite a lot of time and effort on this, and we came this close probably to seeing it through. So 2 or 3 comments. One is the interaction with SEBI has been very positive, I must say. So SEBI, right from the start, was very eager and willing to know what are the international best practices. They were quite transparent in getting stakeholders together, and I'm not just talking of developers or asset managers. They got representatives of investors, of retail investors as well, all to sit in a room and say, all right, let's discuss what should be the approach towards the big ticket items, valuations, related party transactions. So they went through it in a very systematic way, and they came out, as everybody knows, there's the draft REITs regulations out, public comments were invited. So all of that piece has gone up well. The other piece where I mean, they've also been very proactive is in taking up certain matters which was showstoppers with even the ministry level. So while I've had quite a few flights to Delhi, earned quite a few frequent flyer miles around this, but you know, I do know even the regulators were pretty active in trying to push some of this through at the Delhi level. As you know, is stated in the media, I think where things got stalled was the tax piece. And without getting into too many details, tax can be quite complex, and if you add India in front of it, it's complex and scary. So, but just keeping that aside, the feedback we got from institutional investors who were eager to come and invest in India, put in more capital, was saying, broadly looking at a 10% return, any tax leakage beyond a 20% rate, 10%, would make this investment not very attractive. And therefore, whatever structure you put in, whether it's a trust, it's a SPV below, dividend distribution tax, corporate tax, all of that stuff, we're looking at a net effective tax leakage of 20%. Right? The way the law stands today, I think you have corporate tax in the DDT, tax rates could go up to as high as 35-40%, and that's to making some assumptions around some interpretations. So clearly not a workable solution. I think we did manage to get this issue across to the ministry as well, and as Nishit Bhai correctly put it, it's a question, the concern about export of capital out of India, right? The Singapore listing, Fortis has done that successfully, as well as foreign investors wanting to come in but not having a structure by which they could get in good amounts of capital under this route. One of the technical issues which came in the way was, yes, this I remember was sometime in December or so, where I think we almost saw them getting a bit positive on it, and then they stepped back and said, hold on, we don't see the budget coming through in February, right? And what you're saying requires amendments, serious amendments in the income tax law, because the ask was very clear. We do not want to do any cute structuring. We want a law which is very clear, categorical, and leaves no room for any doubt whatsoever. And this whole election thing and the budget not happening and getting pushed back, I think that was one of the things that contributed to putting things in a spin. Right? So if you were to ask me, when is this going to happen?
Roll out?
Realistically, I think it's going to be a question of, as you put it, the buy-in from the top. So depending on who comes in, I think in terms of regulations, wordings, etc., we've already put all that in the table. Right? So if somebody wants to do it, it's a matter of picking that up and putting it in the budget,
so
which is in June.
after a stable political, ministerial environment, a year from there?
I would say if there's a buy-in, the change could happen in the budget now.
Sure.
And that could be the starting point. Obviously, there'll be time lag for people to get things together, register, put assets in place. Could be another 6 months more before investors start coming with money. But the start has to be this change in the tax law.
Great. Thank you very much.
I think it will take about a year to year and a half.
Least, I would
I think.
Yeah.
At this
And
because-
I was quite pleased by the statement that he made that we'll get it right the first time. That will be the first ever in last 60 years, in my opinion.
And
But
I
that will
hope
be
if
great
they
to see
take-
it.
If they take 6 months more, doesn't matter, but let us get good rules out.
Correct.
The problem is we bring rules in hurry and then we keep on going.
Changing
so this
it and
time,
we lose confidence.
Yeah.
I agree. Moving on to the obvious discussion that we wanted to have, and we think it's a game changer, but why do we think it's a game changer, and how is it as a game changer? Game changer for developer, game changer for investor, institutional investors and retail investor. Just wanted to have some discussion around it, and I wanted to start with Aftab, if you can step in, and not just limit yourself to the question, but if you have something else to share as well.
Sure. Before I come to this question, I would like to buttress the point which you made, the taxation leakage of 20%. Just to give you a perspective, all these instruments, especially REIT, it came in US first. It came in 1960, but it was not a success story till 1986.
That's not a good example to follow.
I tell you the
I would be
reason.
worried.
I tell you the reason. Because till that point of time, there were certain structures which were more favorably placed than REIT, which was LLP.
Okay,
Only that this advantage was removed,
sure.
REIT took up. And that's why the issue which you are raising up is very important.
So it's better to get that right.
It is better to get that right before starting. Coming to the question, what kind of instrument this is going to be, whether the game is going to be changed. Let's first look at what kind of creature is this. Globally today, it is practiced in 30 countries, 30, 40 countries maybe. Take all my data as ballpark numbers. There are 300 REIT instruments whose valuation is roughly $800 billion, and it accounts for 6% of the commercial assets. Globally, if you are asking for regional breakup, North America, that accounts for 40%, Europe accounts for 15%, and Asia accounts for 40%. But that's slightly misleading, because in Asia, Japan and Australia, they account for 80%.
80%.
So they are in developed category. If you are talking of India, in India, a rough estimate says that commercial estate is roughly $400 billion. Now there is no REIT except some private REIT, which I hear.
And you would say that investable grade A assets?
Will come later to
All
that.
right.
Now, if the existing commercial asset, which is 400 billion, if at the average global rate of 6%, if it gets converted into REITs, we are talking of $24 billion. Yesterday, I was having a discussion with a gentleman who is well informed in the industry. He says the moment rule of the game is ready, roughly $10 million is ready to roll out.
Wow.
So, this is the existing potential, immediate potential.
So why do you see it that way? It's because when you look at India and you look at greenfield investments with so much of issues, development, approval, marketing, and there is this income generating asset, is that the appeal versus the other, or it's just globally there is capital seeking so much of income?
See, we cannot be in a different bracket than what is practiced globally. Sooner or later, we have to fall in that line.
Okay.
If I say that globally 6% of the commercial assets are in REITs, sooner or later in India also the story will come. So we are talking of $24 billion immediately. And size of India's commercial real estate compared to its GDP at this point of time is not favorable. In the sense that India's GDP compared to global GDP roughly is 4-5%. If you are talking of India's commercial real estate compared to global commercial real estate, it is merely 1.3%, 1.4%. So we have plenty to catch up.
Okay.
So there is tremendous potential immediately as well as in times to come if we are looking from the supply side of it.
Okay.
Now, supply of instrument may come, but it has to be demanded by someone. Why it should be demanded by individual investor or institutional investor? Now, there are plenty of advantages for all the players. If the rule of game is certain and if it is marketed properly, there is plenty of advantages for institutional investors as well as retail investors. Let's look at advantages for retail investors. All the retail investors, they have got sort of romantic relationship with real estate. All of us either hold or aspire to hold real estate. We have not been holding it because of certain reasons. Either we don't have deep pocket or right kind of instrument is not available. Now with REITs coming in, what are the beneficial features which we will be getting it? First of all, this is an instrument which protects you from inflation. There are many instruments which protect you from inflation, but this instrument particularly protects you from unanticipated inflation. And that is very important in our kind of market where things turn topsy-turvy.
Mm-hmm.
The second thing is, it is income producing asset. Everybody loves to have income, but its associated beauty is that when it is income producing investment, it has to be designed with a lot of seriousness. You cannot have a trophy asset in your portfolio. You have held out to the investor, you will be giving 6% or 10%. You have to give out, so there has to be a very scientific way of investment here.
Okay.
The instrument itself forces you to do that. The third beauty is that it is a great diversifier. If you read finance literature, it says that with equity, its correlation is, say, roughly 0.5%. With REITs of other countries, its correlation is still less, a quarter. So lower the correlation, better the place of that security in that portfolio. So from that angle, it holds a lot of promise. There are certain other advantages also. One is your asset allocation becomes very easy. For example, you are an investor, you are building a portfolio where you want to allocate 5 lakhs to real estate. Would you be able to allocate 5 lakhs? No, no way. The only way you can allocate is when this kind of instrument is there. That is the initial allocation, and after that, if you want to change the allocation, suppose its pricing has run up, you want to size down, you want to do 10%, you can easily do that.
Sure.
And
So mostly from institutional and retailers' perspective, I would say.
if I'm looking from institutional perspective, for institutional perspective, see, if you're talking of institutions like bank, for them this is the opportunity to deleverage themselves because they have given a lot of money for commercial development. Money is locked up. So risk will be reduced in the system when this kind of instrument is available. Secondly, if you're talking of institutions like pension fund, etc., and I talk of pension funds and charitable institution in GCC region where I work for, there is plenty of money chasing low but stable return with certainty. In India's context, it becomes slightly different because currency fluctuation also comes into play.
Correct.
But
Good to know there is capital chasing India.
increasingly now, earlier their focus was not in India, but increasingly they are looking towards India.
Very assuring.
We are investing in India. In fact, just to digress from the topic, first investment after being set up in 2009 we did was in India.
Amazing.
If I'm
One of the
looking,
few people, I must admit, who seems very happy after investments in India. We should talk about good stories. You know, how come we miss it? Yeah.
That's
we made our money in India. We intend making our money in
We
India.
need to do a case study on that. Yeah. Are we done, sir?
Yes, that is.
I'll come back to you if you think appropriate. I think we had a good look on institutional and retail investors' perspective. I think it'll be equally good if we cover developers, so we complete the round. So to my left, Niranjan ji, and then followed by Arsh. Is that all right?
perfectly
So,
fine.
From developers' perspective.
I think we've been chasing the REITs for only 15 years. So it's about time we look forward to it. Last December, as he correctly said, we were almost there, but we are not there, and the slip between the cup and the lip was pretty long. Three things have come in the way. One was the question of what would be the stamp duty in terms of transfer to the REIT. And the issue was if it is equivalent to conveyance, then the REIT doesn't work at all. Second was the issue of how do we do it and what should be the rate, because it's land being a state subject and stamp duty being a state subject. So at the end of the story, the whole from a balance of convenience from nil, which we were wanting, it was said that if it is equivalent to a mortgage, which is between 0.1 and 0.5% in most of the states, it would be something which would be acceptable to industry as well as developers, including financial institutions, and provide viability for such a transfer to take place to a trust or a company or a corporate or an LLP, depending on how you create that media. And the third, the other part was a pass-through, which was 90% a pass-through of the income to go to the holders, which was okay because it was equivalent to what the mutual fund route is there. And the last was the question of capital gains. And that became another factor which required the Finance Act to be amended, because when you transfer to any other body, whether it's a trust or a corporate body or a limited company, etc., we have capital gains, whether short-term or long-term. And so we said that the first transfer, which is transfer to the REIT, should actually be exempt from the capital gains, because otherwise the residuary value coming into the REIT requires an outflow of tax at the initial level. So that's the issue which is now pending before the Finance Act and the Finance Ministry. Barring that, I think the hard work put in by everybody has been very fruitful. SEBI has, of course, been the leader, but even the Reserve Bank of India has given its green signal. So that was a very, very great positive that we were able to obtain from the central bank of our country. And I think that means that whatever government comes into place, or the finance ministry, the whole cake is ready on their table. So it's only to pick up these issues and be able to get it done. And I think it looks like a possibility. If it happens in the immediate budget, wonderful, but I'm sure within a year's time we will have it in place. So I think the REIT is looking like it's there, and it will be useful. From a developer's perspective, I think it's a wonderful thing to pay off the institutional investors when you have amounts, so you get your money back as early as possible, especially in the case of commercial real estate. I think that's it could also be for retail, it could be for hotels and other things. I think it's a good exit route that I think the developers find it to be able to pay back to institutional investors. So I think it will be a wonderful way out. There are a large number of people who have not been able to exit, not lucky people like we have here, but other people have not been equally lucky. And I think those people will find it extremely interesting to see if that conversion through a REIT could provide liquidity into the system. But I think there is something more than that I'm looking for. I'm looking for rentals to come in much more stronger, both on the residential side and the commercial side, because if you compare our country with any of the developed countries of the world, the amount of rental, whether residential or commercial and others, is much, much larger. So even in the United States, 40% of the total leasing is rental in the case of residential, and commercial, I don't know, I believe the percentage could be as good as 80 to 85%. So obviously the commercial, residential put together, the potential that we have in India is very large, untapped, unheard of. So I think the benefits which is going to come up in terms of opening out for the developers side, both on the residential, commercial and retail, I think there's going to be a huge change in what is going to happen. As far as guesstimates are concerned about the numbers, we had a chat with the Reserve Bank governor about 2 months ago, and we speculated that if it was opened out in the budget of this year, we would have got $5 billion before March of this year. Wow. And we will, because there are so many commercial assets waiting, correct, which are actually mature, and people are actually looking forward to this happening, so we were expecting that. But having said that, we said there'd be 20 billion in the course of the next 1 year once it starts getting into operation. So we, of course, this figure looks ambitious, but don't be surprised if it goes through, because India looks interesting to most of the people outside at this point of time. We're coming back into the investment curve, and I think there's going to be an opportunity where REITs will be a starting point of the FDI, and not FDI pure and simple, but you'll see the REITs coming in first, because it's, as you said, more safer in terms of taking a risk profile, and you are able to get an exit route by investing in a REIT. So since it's going to be a tradable asset in the stock exchange, you'll be able to exit out at any point of time, which an FDI cannot do. So I think the liquidity parameters available to investors worldwide is going to change, and I think it's not going to be a great game changer. It's going to be the greatest game changer as far as real estate is concerned in the next 12 months. So I really think it's going to make a change. I think what 2005 did in terms of policy change, in terms of investment of FDI into India, I think 2014 and 15 will see the same thing happening. Not that FDI is going to come down in real estate, but I think REIT will overtake that investment in the next couple of years, especially in terms of what you said, pension funds and other funds which are actually not really into the Indian market. I think they will come through the REIT market. So it's very, very interesting, very, very attractive, and fortunately, thanks to SEBI, I must repeat that SEBI took huge steps and very constructive, positive steps in bringing about this policy, very well studied, and I think they covered every aspect of all the stakeholders who were really to take, participate in this whole thing. So I think we're looking forward to this particular thing as a game changer for India real estate in the next 12 months. And I don't see any which way, if they want money to come into real estate in a big way, REIT will not come. I mean, it's the other way around. Somebody would be quite stupid not to do it, because it's simple, there's no risk profile. 15 years ago when we pushed it, one of the criteria for not bringing it was there was not enough highly rated commercial real estate rentals available in the market. So it would be wrong to allow it to happen. And I think that maturity has reached, may not be in the volumes which Aftab is talking about, but obviously I think a beginning would make a difference to India completely, and also the financial part of bringing it in.
Thank you so much. I think before Arsh, you take up, we have
a very quick comment at this point in time, and that's just do analysis. And that's what is the likely impact of BJP not allowing retailing in India, because 1/3 of the assets will be commercial. I would say half of it will be commercial, but 1/3 will be shopping malls. And for shops, you need goods, so you need warehouses. So if you do not open up real estate, the retailing will have serious implications on 1/3 of the asset class. And that's where my guesstimate. I am not an economist, so please pardon me on that. But I think this is something that we need to carefully address, because we are talking exactly, we talked about the commercial real estate, and that's where my concern is, that how do we go about, and that's what I also hear from other quarters of the world, this retailing, we should find some way. There are always going to be problems. BJP has its own issues, but industry has to find its own solutions in terms of developing some models.
My view, I was watching an interview on the television of one of the senior leaders of BJP.
Yeah.
Don't want to name it here, but I think the way he went about articulating it seems like he was the only person concerned. And as far as the manifesto is concerned, it's more like a timing of the manifesto and elections rather than actually the things going to happen on the ground. I think that once the office gets rolled out, I think there would be enough for them to then consider other, segments of real estate.
This is only one sensitivity point, that we are.
No, absolutely right. And I think that sector also needs more organized shopping center play. And there seems to be a kind of a disconnect again between cost of building such assets and the rentals that they are able to secure today, or the revenue share that they get from most retailers. But I think there will be a maturity in that place as well, and you will see that. But
on regulations, we are almost there, I think.
Correct.
You rightly
Correct.
said. Just
Correct.
Final blessing.
Nitish, only one small point to distinguish. One is the retail for the malls.
Right.
And the second is the retailing in terms of FDI into retailing. So we'll still have the malls which are there, which are stuck with capital investments to be able to exit out through this route. But I agree with you that we won't be able to get into the FDI for a single unit, single brand retailer will still be an issue. But I think what they have done is probably allowed 97% to go through and kept 2 or 3% behind, because I think Delhi has a lot of single person retailers and they want to win Delhi votes also. So I think there's an issue in terms of city of Delhi, where I think a lot of pressure came from the BJP at the organization level. So probably so I think I agree with you, Nitish, it's a concern, but I think at least the malls which are sitting with a lot of investments done would be able to exit out. But I agree with you that new FDI in retailing could be still a concern.
Sure. Ashpit, over to you.
So I think I can't agree what Mr. Heenandan said. I think the 3-4 points which are very important, and I think structure is ready, but the soul is missing in the existing draft note that we've got. And I think, as you rightly says, the SEBI is highly proactive to really consider the amendments have been sought by the industry. And having said that, if those are done, I think to me REIT is a clear winner. Because don't forget that for last 10, 15, 20 years, everyone has actually built retail and office, and unfortunately few of the development company has gone for a listed option at a lower and higher stock options. And you could clearly see that they potentially have not done exponentially well, because clearly it's a very hybrid structure. So you've got a bit of resi, you've got a bit of retail, office, everything there. So therefore, from my from an investor standpoint, there's no clear focus that, where are they really making money on this. Unlike in this option, you have a clarity of asset class, if it's an office or if it's a retail, you've got a long leases, and therefore a much more transparent and a foreseeable returns than one can have it. But I think there are a few concerns beside Mr. Hiranandani talked about on the stamp duty, pass through. I think there's few more concerns are there. As much as I, personally feel that the size is really important. But I think having said that, the size which is there, it is really good, but it may prohibit the smaller players to come in there. I mean, if you look at.
But that was intentional by the government, I think.
No, I appreciate that, but it's good for, if I be biased on that, I like to have only 3 listed entities and therefore everyone merged with us, But I think when you look at a little more broad perspective from industry standpoint, I think
Obviously.
then, we having 5-6 people really being macho about it. And this is typically you see in Singapore as well, where you see a CapitaLand has got a similar model that they're really just doing. They've got an understanding of REIT, they're just going out in China and other markets and really buying it there, which is very good. But I think, to me, those are much more mature market. They ran the REIT for last 10, 12 years, we being obviously starting, a baby step on this. And I think it's important that have, some bit of an opportunity being given to a smaller players as well. So that's one. Second, I think is also important, which is obviously part of the revised revision, is that the foreign investment needs to really come in there, because today if you look at retail has got a tremendous potential on that, but as Mr. Hayat also talked about, the amount of capital which is still waiting to come into country is very large, and unfortunately there is no exit mechanism that you have it. And I can promise you from a development standpoint, the time that you discuss 90% on an agreement is how to exit a developer or an investor. There's absolutely no other discussion. They're more concerned on exit because these are all privately held companies. So unless you have a right exit on this, and I think it takes away a lot of opportunities and efforts on that.
If I was to throw in a question, just to get the conversation more exciting.
Yeah.
You have a trust listed, and you put together a portfolio of 10 or 15 million square feet, and you explore the reverse merger with the listed entity in Singapore, versus wait for next 2 years and explore what would happen.
So, I have a little more biased and a little more hybrid opinion on that, because, and as much as we're highly optimistic, we look forward to a new government coming in there. We're only hoping the new, set of people come and they're pro-business and they'll do it. But to me, personally, and again, to me, the REIT, I'm not too sure in terms of the priority, where does it stand today. There are whole tons of economic issues, the currency issue, the deficit issues, and there are high priorities on this. So when will this really fall in and gets an attention from our Ministry of Finance and Commerce, say yes, please proceed on that. So I think point number one is that as I talk about 15 years of waiting, part of my saying we're getting now a little frustrated, that much patience, we really don't have it,
Well,
whether you call
some of us are mid-40s, 50s, we got to change things, right?
So, you could call a youngster, you call anything, but I think we're a little frustrated now, and how long you can really continue waiting on this, From our standpoint, it's important that we have a clear vision. If that's going to take 24 months, then we keep high tide on this, and 25th month we know.
And get it done right.
Yeah, but unfortunately, the crystal gazing ball that today we have it, we all hoping 272, we all hoping new government, we all hoping the Prime Minister, we all hoping it. If that happens, applause, and we all happy,
It comes in the budget and the first budget.
So I think real estate developers or investors are highly optimistic, always.
I have 2 more very interesting angles to get the little excitement in the room. So imagine you have a common man standing near the Bombay Stock Exchange who invested in all the listed entities last few years, very excited because they made romance with the real estate, the way you spelled it out. And they really had a long romance, right? It didn't work out. Sometimes it happens in marriage. But imagine if they were to given this opportunity now and present, look, there's another opportunity to have romance. How would they view it? In true sense. They've experienced some already, and they believe in tangible asset, owning, touch and feel, ye bachche ke naam, ye uske naam, ye bibi ke naam. You know, there may be many more, but
Can I?
Yeah.
Sorry.
Go ahead. No, go ahead.
No, let's take two international examples. Let's take Hong Kong and Singapore. The success in Singapore has not been followed in Hong Kong.
yes.
So let's be clear that you can either go the right way or you can go the wrong way. Hong Kong didn't go the right way. There were lots of issues in terms of the Hong Kong REITs which did not work as successful. The Singapore REIT has succeeded beyond imagination. And that's why probably the conservativeness in terms of size in the beginning is what SEBI has suggested, though I agree with you and I disagree with SEBI on the higher size. So I'm with you, Mr. Sethi. But the point is that one of the reasons why SEBI was conservative in the initial stages to do it is that they are very keen that we should be Singaporean way, which has succeeded hugely as compared to Hong Kong, where you saw a fall in prices in terms of REITs because wrong type of properties went into the REITs portfolio as compared to
So how do you
Singapore.
filter that?
Yeah, that's exactly the point. That's why they said that in the initial stages, they'd like to see larger sizes of REITs, which are well managed and well portfolioed, rather than having that across the board in the initial stages, so that there could be more effective control in that part of it, is what is visualized by SEBI at the first instance. Again, I disagree with that, but that's the view which SEBI had on the table when I argued with them that about the size. Exactly what Mr. Sethi said was one of our arguments with SEBI, that why should it be 500 crores plus, every one of them? Why, I mean, how do you really, it didn't make sense actually.
So you're saying large is good?
No, they said they expected that HDFC, ICICI, larger funds, you know, even the international banks and financial institutions and others would come at the first instance with larger sums of money, where where the transparency and the best practices would come on the table at the first stages, so that at least you have the first round of great successes story coming on the table, instead of the other way around, where the first stories would not be successful.
So I want to throw in one
Which is
angle.
exactly what happened in Hong Kong. I mean, let me say, Hong Kong has gone the wrong
It's
way.
wrong
And
way.
it's a very sad story that Hong Kong has not succeeded, while Singapore has succeeded beyond imagination.
But I think Niranjan, Singapore succeeded because the second most transparent economy in the world after Australia. But I wanted to throw in another angle, if you can answer this. So if there is anybody from the valuation department in the audience, thinking caps on, and we're going to start some Q&A very shortly, so giving you a heads up. Imagine there's a grade A asset. It's a question for all of us. Fully leased, grade A occupier profile, and that some of the rental stream actually includes rental of HT power being drawn but converted into LT power and being charged at a higher power tariff to the tenant, and there's an income stream that is coming out not linked to the asset but to the service drawn from the asset. I wanted to understand how would you value that, if there are any experts on the valuation. And imagine that asset getting listed at 20% premium at the REIT, and first cycle of market corrections or renewal, you see renewals happening at 20% at a lower rental than forecasted. This is one of the many that I witness. Every day I make a living out of this. And I'm telling you, 20 rupees per square feet just on HTLT Delta on a AAA asset, which is very likely to be listed, the first listing probably. How would you address issues like that? And there are many more.
I can add one more.
Yeah.
The government of India, the Prime Minister and the Commerce Ministry made a commitment to all investors coming into India that SEZs would be tax-free for 10 years. And then they decided that the Prime Minister and the Commerce Ministry doesn't make sense, so the Finance Ministry decided to put MAT, so you put a tax of 18% on the net profit. Correct. So if you're listed before MAT came into the picture, then you would calculate on the basis of a zero tax portfolio. Nitish Bhai would confirm the tax rate and the issues, which I'm not as expert on, but I suffered on that side. So I know a lot about it because of sufferance, not from a law point of view. But at the end of the day, that listing would obviously make a difference, because there will be a 20% difference in the listing price to add to the type of example you have given, which is, you know. But here the government, after making a commitment at the level of the Prime Minister and the Commerce Ministry of India goes and backtracks after 3 years after the money has come in. So you're going to get strange...
That's why government, everybody says is going to lose.
That's a good angle.
Don't get me wrong, I'm not being judgmental. It's not a legal opinion either. But
I think that's not a bad answer at all.
Everybody says it, I don't say.
Yes.
The point is, I think you asked a question. A small man like me, you're standing outside the stock market. Would I invest in the REITs or not? I think that was the starting point, right? There are two answers to that. Number one is that this time the regulations which we are proposing, I think are much better than what they were 4 or 5 years ago. So transparency and the related party transactions are the biggest stumbling blocks in any valuation, and that is really hitting it. So there is one side, so regulation has taken care of small investor in many ways, nothing is 100% perfect. And second, it will be for the industry to show governance and one step ahead of what elsewhere, because if you, however good regulations you have, if industry and real estate with respect, there are few people like you and some others, in the industry, but there are a lot of malpractices going on. The image and the governance, I think selling on that side also will be very helpful. So, governance and the regulations put together, I think.
And the institution will bring the best practices. So I think we headed towards closure. There's something
Just one small point on this. You spoke about somebody standing outside the Dalal street and wanting to invest. There's a lot of discussion and debate about the minimum ticket size as well.
Yeah.
Right? So SEBI, after hearing everything, said 2 lakhs minimum ticket size. Now obviously somebody who's going to invest 2 lakhs will have a net worth of, beyond that. Right? So they deliberately stopped a 5,000 rupee or a 10,000 investment out of this. Right? And coupled with the size of thing, I think where they were coming from, it's more likely to, result in better governance and have a more sophisticated investor investing rather than just the retail.
Which is the right way to go about it. Yeah. Thank you very much. Sorry, After.
I'll just like to add on this. You were talking of romance with capital market, and probably you were hinting at the people who have burnt their finger in real estate companies.
And many other things beside fingers.
Many other things, their shirts also. Well, investing in real estate company and investing in REIT, they are two different things.
Yeah.
When you are investing in real estate company, you are giving total discretion to the builder. What he wants, what fanciful thoughts he is having, right or wrong. Here, things are much more disciplined. Notwithstanding that, investors have to be educated. Like you are saying, in Hong Kong, it was not a success story. In Singapore, it was a success story. And Singapore is the only country which has capped its leverage to a very conservative level, 35%.
Which is very good.
Probably because
conservative.
Despite that, there have been problems all across. For example, in Hong Kong, liquidity has been a big problem because of bad assets going into it. In Singapore, some failures have been there. In Japan, one of the big problems which was noticed was that there was a lot of vested interest between managers who were external and the REITs itself. And the return across this kind of REITs was significantly inferior to REITs which were internally managed. So there is a need of education amongst investors. They should not jump in just thinking that their money will triple in 3 years.
So education you highlighted is very important.
Very important.
Great. I think the house is open for Q&A. Before we give a round of applause to our panelists, if there's anybody in the audience wanted to ask any question. Great. I think, thank you very much, the panelists. A round of applause to all.
Nice.
Thank you. Pleasure to see you. Pleasure to see you.
My pleasure.
There is a publication on REIT in case you guys want to have a copy collected. Personally, comprehensive. Thank you.
I started with scrapping of ULC.
Sure.
And
May I request Mr. Datti to the honors and present his matters to the panelists, starting off the gentleman to your extreme right, to the audience's extreme right rather, to your left, Mr. Dutt. To Nishit Desai, Founder Managing Partner, Nishit Desai Associates. Gautam Mehra, congratulations. To Mr. Alam. Mr. Hiranandani. Mr. Sethi. Mr. Desai. And Yes, of course. Do us the honors. I request Mr. Hirandani to do the honors and present. May I request a photo opportunity with the panel, a full photograph. Thank you. Ladies and gentlemen, we'll give a round of applause for this panel. Exciting discussion, finished well in time. Thank you, Mr. Dutt. Thank you, gentlemen. We'll have a 5-minute recharge break. We'll be back with the next panel, which is already ready with us. So don't go away. Be back with us in 5.